Hi all, sorry if you have been watching my previous video. Facebook had a minor glitch, and because of that, I got dropped, and I'm launching my video again, live video again. So I've been saying, like, are you still investing in fixed deposits? Do you want to know the comparison between the fixed deposit and other asset classes like mutual funds and index and other goals? And inside mutual funds, what are the other varieties of large cap, small cap, so many other? Which one to choose? So this is the confusion which is existing with so many people. And why should I go out of fixed deposit, that too with people like elders who are getting retired or who are having huge chunk of investments? They have a huge amount of money in the fixed deposits and thinking, should I invest in some other assets for better returns, or should I hold on to existing fixed deposits itself? So if you have these confusions, please watch this video and share it with your elderly ones and people who are having if you think that it will be of much helpful for your family or friends, please share it with them. Thanks for being watching me, and I'm Ganesan, your millionaire coach and author of the Money Leaks. And today we're just going to discuss about fixed deposits, and I'm going to compare live on what how these assets are, and one beautiful website where you can technically analyze and understand how these returns work in mutual funds, and how these returns can be compared with other fixed deposits and other asset classes, mainly fixed deposits and gold. So before othering, like, let's get into the today's topic, like why you are still investing in fixed deposits. The number one reason may be the safety, liquidity, and if you are a conservative investor. So more than safety and conservative, the people whom so I asked, they say that it's safer to deposit to put my deposits with fixed deposits, because whenever I want, I can go and take. I can have an interaction with the bank manager. I can withdraw at any point of time. These are the things. And apart from that, you should consider you are investing your money just to make sure you are getting a bigger returns. And if you think, do you know, I just got this topic when I got a bigger notice from SBA saying that the returns have been brought down from 5.9% to 5.7%. Let me share that so that you know what is the current value. So okay, here is the returns. If you see, this is the return. So for 1 year or even lesser, the returns had gone down from 5.9%. It has went down to 5.7%, and only for senior citizens, it's staying above 6%. So do you think these returns are much sufficient in the current environment? Uh, if you say that this is much more enough, just think of you are retiring at 60, and for the next 20-30 years this amount should be there. And in between, if you are falling sick, or you are in need of money, you want to go for a pilgrimage, or you want to go around the globe visiting your favorite destinations, think about how much money you need. And if you're taking from your retirement corpus, will that be sufficient for the next 15-20 years? And it's not only for you, for both the life partners you are together, right? And for something left, you should leave for your kids as well. So considering all these things, is that money sufficient to earn the fixed deposit returns alone? So you should think twice, not twice, more than that, to keep your money in fixed deposits. And one more thing is the inflation point. Though the inflation has been around 3 to 4% because of the drop in crude oil prices, drop in gold, and all those things, but the thing is, the lifestyle expenses which is not added, and which you need to consider, this is inflation. You should consider the lifestyle expenses put together, because the mobiles, the day you got the mobile, from that time everything started coming in. All the you can order from Pepperfry, Swiggy, whatever, what you want, you can order from your mobile, and you can use it immediately, right? So in that sense, all these lifestyle expenses, you can, if you just look around your living room, think of how many things you just ordered, seeing that it's really necessary. Most of the things, even the size of the TV, has been because of you had money, or you can put it on EMI. So that is the reason you had ordered on EMI, and you started using. There is nothing wrong. Like earlier, 15-20 years before, there was nothing like mobile phones or broadband or knowledge on what are the products you can buy, anything. But now you have a mobile to buy everything, and you have money, you have EMI options. Putting it together, we started enjoying, including me. I'm saying we started enjoying life. So in these kind of scenarios, you should consider not only inflation, you should consider both lifestyle expenses together. So considering both these together, it will obviously be around 7 to 8% for sure, minimum percentage. to anybody. Even if you think that you are a miser, you may spend something on some certain things. So 7 to 8% is the ideal scenario. If you think 7 to 8% is an inflation at this moment, now the fixed deposit returns 5.7%. Is it really enough? Say for example, you're buying a product now for 1 lakh rupees, and after a year, if you're buying something, the same product, the including the inflation, it would have been around 1 lakh 4,000. And if it has been including your investment returns will be around 1 lakh 5,700. So you are getting a real return. And our inflation is not only the average retail inflation, we need to include uh, lifestyle expenses. So in that scenario, our product price would have been around 1 lakh 8,000, and our deposits are just 1 lakh and 5,700. So we are falling short. We will not be able to buy a product just by investing in fixed deposits for a year's time itself. Think about, you are investing your investment in a fixed deposit for 5 years, taxable fixed deposits, and after 5 years you will not be able to buy the same product what you bought today. So you should think that, so is it really enough worth to put your money in fixed deposits? And even I saw some of my friends and colleagues who worked along with me, they say that as it is nearing March 31st, though it has been extended now, previous years and all, they used to put their money in taxable fixed deposits, thinking that it's conservative, it's okay to park their money for 5 years. So considering inflation and all the kind of expenses you make in your IT jobs or in your white collar jobs, think about whether that is really a worthy decision. You are working hard or you are spending a lot, and for that you should keep up with your proper investment planning as well. And I'm going to share a beautiful website where you can analyze yourself how much returns it's sure, how much returns you can compare the fixed deposits, the gold and the other mutual funds. So you can also go and analyze yourself and then come up with which is the best. And one thing I want to say to you, that don't go by the best mutual funds in the last 3 months or 6 months. You should go by the advisor, or you should analyze yourself much deeper, like whether that fund has withstood all that last couple of downturns, and like that, the more scenarios like that. Now what I'm showing is some of the funds which I'm tracking, and some of the funds which is good. And I'm taking SBI for example, because many people can resonate, because SBI means the safety, almost like fixed deposit. People think, can I put an SBI? So based on my client interactions, I thought SBI would have been an ideal mutual fund to share, to compare. So I'm sharing my website where I will show. And before that, this is a previous history of PF. So from 1970, you see the rate was 5.7, and 50s it was around 3.75. And if you see from 86 onwards, it was in double digit. It was in double digit 11%, and only from 2001 it started coming down 9.5, 8.5, and now the returns are around 8.6. Still it's standing, but as the rates have gone reduced now, for sure the PF rates are also going to go down. So let me share my website where it is going to show. Yeah. So this is the SIP returns of the from 2010 to 2020 January. I'm taking. I'll show why I took till January in a short while. Okay. Okay, now it's clear. So I had taken the period from, this is one of the fund called SBA Magnum Multicap. This is for illustration purpose, for explaining. And if you're taking the returns of investment of 10,000 every month from 2010 to 2020, I took it only till January. I'll say what is the reason. Because if you see that, if you compare the scheme returns, or average was 13.58% in the 10 years period, and when you compare it with BSC, it was around 11.3%, and for gold it's 8.18%, and PPF it stayed at 8.19. Clearly we I just said that including inflation and lifestyle expenses in India, the average real inflation will be around 8%. And now if you see, PF is also 8%, gold is also around 8.18% the last 10 years, and this mutual fund has given 13.5. And if why till January? Because from January 10th or 15th, the coronavirus started spreading. And if you see the graph here, the market has fallen like anything. So let me change the data. What one couple of months can do to the stock market. 7.6%, nearly 6 percentage drop just because of this last 2 months. And it's of no worry, because if you are an investor for a long term, you don't need to worry again. And if you have been following this just when it entered the January, and just when the market has started reacting, you could have pulled that amount easily. You could have saved at least at 12% returns. So this is for comparison, I'm saying. And the next one is a lump sum investment in a fixed when comparing with fixed deposit, and as well as with small cap fund. Small cap fund, because if you are investing for 10 years period, it is good to invest in small cap, because that the return generated will be much higher. If you had invested 1 lakh in 2009 and 10, because our returns are 10 years period, and your investment would have been 1 lakh, and your current value would have been 3.86 lakhs, close to 3.87 lakhs, and the returns would have been around 14.5%. If you see others, DSP is around 11, more than 11, and Franklin India is around 9.7%. And then last one, this is comparing with other asset classes. So from 2009, you had invested 1 lakh, and your equity fund would have been worth around 7.27 lakhs if you had invested in focused equity fund. And the annualized returns, you can see it, 9.19%. And even deducting the expense ratios, it is worth around 16-17%. And as per BSC, it's around 11.7. It's beaten the BSC by a huge margin. And in fixed deposits, you can see the comparison. Fixed deposits would have given you 2.26 lakhs, whereas here the returns would have been 7.27 lakhs. And gold, it's 9%, as we saw in the first comparison with mutual fund the last 10 years. And now the current value is 2.65. And to remind you, gold has risen almost by 20% in the last 1 year only. And till 2019, the growth of gold has been very, very flat. So considering the mutual fund, again, the market value has dropped in the last 1.5 months, and you need to allocate the market value, allocate the mutual fund based on the market analysis. And that's why you need a proper guidance if you're not clear how to do that. And let me take another example here, because the returns are around 19%. Let's take another example. I'm just showing SBI small cap fund, where even here, if you see, the returns are 4 lakh, more than a 4 lakh, and its average returns are 14.26%. When you compare it with either the index fund, small cap index, or fixed deposits, or gold, it has given more than a lakh. See just how the 4% return, 4% difference between gold, fixed deposits, and mutual fund can give you almost close to 1.23 lakhs of returns. So this is the reason we say that don't put your money only in fixed deposits, and use your fixed deposits for having your emergency fund, not more than that. And emergency fund, how much you should have? At least 6 months of your expenses, you can have it in a fixed deposits. Or and even in savings, you don't keep not more than 20-30,000, because the returns had gone down to just 3%. And fixed deposits, have it whenever you are in need, you can break it out. That is one thing you can use your fixed deposits. And if it is much more, allocate your money wisely in mutual funds. There are different types. What I showed is only equity. There are debt funds which doesn't invest in equities. So debt funds, it's almost like a fixed deposits kind of thing. Invest in ultra short term or short term fund for the, if your investment period is 2 to 3 years. What you need to do instead of fixed deposits is that you should be prudent enough what you're going to do in your financial life. If your financial goals are clear, for the next 2 years I'm not going to buy anything, I'm not going to invest anything, then invest wisely in short term fund. And if you're clear that I'm going to buy a new car in the next 4 years, start planning. You can put it in short term fund or gilt fund for the next 3 years, and then start withdrawing it, and then say start looking at buying your car. So this is how you need to plan your financial goals, and then as per that you can invest in mutual fund itself. And if your investment period is huge, say from 5 to 10 years, you can look at investing in equities, because the market is available at a greater discount now. More than certain stocks are available at more than 50-60% discount. and you can look at only quality stocks. Not all stocks are good, because across the market the stocks had gone down. So don't look at investing in a stock which you have been tracking for a long time and available at a cheaper price, because look at quality stocks, the large cap index mainly. Look at quality stocks and certain mid cap stocks which you have been tracking for a long time. Analyze the debt equity ratio, analyze the rate of equity ROE, and then look at the other fundamentals like how the stocks will perform in the next 1 year, 2 year. So considering all these things, you can look at investing in stock market if your investment period is more than 5 years and beyond 10 years. That's what Warren Buffett does. So thanks for watching, and really sorry for if I had started the Facebook Live again, just because Facebook Live got stopped and I just restarted again. Hopefully it's running now. So thanks for watching. If you are like this video, please share, like this. If you are like this video, like the video and share it with your friends and share it in your wall so that many people can start analyzing. I had shared an interesting website called advisorcoach.com, and also a comparison with fixed deposits and how the interest rates have gone up and down in the last 40-50 years. So thanks for watching. Please comment so that I can know, I can share more topics related to money and related to savings and investment. Thank you.